The recent election of Donald Trump to a second term as president has stirred up conversations about what this means for the electric vehicle EV industry. During his campaign, Trump was vocal about reducing government support for green initiatives, including EVs. This direction marks a significant departure from the policies implemented under Joe Biden's administration, which heavily supported the transition to electric cars through subsidies and regulations designed to lower emissions. Trump's presidency is expected to bring a reduction or complete elimination of federal tax credits for EV buyers. These credits, which can offer up to $7,500 in savings, have been instrumental in making EVs more affordable for many consumers. Without these incentives, the upfront cost of EVs could become a barrier for potential buyers, especially those who were already hesitant about switching from gasoline to N-gas. Automakers like General Motors and Ford, which have invested heavily in EV development, might face challenges convincing consumers to adopt their electric models without the added financial benefits of federal support. Tesla, however, is uniquely positioned to maintain its dominance in the electric vehicle EV market despite the anticipated removal of federal subsidies. Analysts often highlight Tesla's robust brand identity and significant consumer loyalty as key factors that differentiate it from competitors. Unlike traditional automakers that rely heavily on government incentives to make their EVs more price competitive, Tesla has already moved beyond that dependency. Its focus on innovation, strong sales figures, and a well-established infrastructure of supercharger networks have allowed it to solidify its place as a market leader. Even with these strengths, the removal of subsidies could pose challenges to Tesla's plans to expand its offerings to a broader demographic. Elon Musk has emphasized affordability as a priority, particularly with the development of a $30,000 EV designed to make Tesla vehicles accessible to middle-class families. The absence of tax credits could hinder the company's ability to meet this price point without reducing profit margins, which are already tight for entry-level models. It could also slow down production timelines, as Tesla may need to reallocate resources to maintain affordability without compromising quality or innovation. Furthermore, Tesla has benefited indirectly from tax credits even if its reliance is lower than that of other automakers. The incentives have helped build a consumer base for EVs in general, creating a larger market for electric vehicles as a whole. Without government support to drive new EV buyers into the market, the pace of growth might slow, potentially impacting Tesla's future expansion plans. Despite these potential hurdles, Tesla's strategy and operational efficiency provide a competitive edge. The company has pioneered cost-saving measures in manufacturing, such as its vertically integrated supply chain and the use of gigafactories to produce batteries and other components in-house. These innovations allow Tesla to maintain lower production costs than many of its competitors, which could mitigate the effects of losing subsidies. Another critical factor is Tesla's global presence. While the US may reduce support for EVs, other regions like Europe and China remain committed to aggressive climate targets and continue to offer incentives for EV adoption. Tesla's strong market share in these regions could offset any domestic challenges. The company's international success underscores its adaptability and capacity to thrive even in less favorable regulatory environments. Also, Tesla's reputation as a technology leader will play a vital role. The brand is synonymous with cutting-edge advancements, from autonomous driving features to high-performance batteries. This technological edge not only sustains consumer interest, but also attracts investors, ensuring that Tesla has the financial stability to weather changes in policy. While the removal of subsidies could slow some of Tesla's plans, it is unlikely to derail the company's overarching mission of accelerating the world's transition to sustainable energy. Before we delve deeper, do hit the subscribe button on EMA HQ to get more updates on Tesla's latest advancements. Let's continue. The Trump administration's focus on deregulation is another factor likely to impact the EV sector. By rolling back stringent emissions and fuel economy standards, traditional automakers may have less incentive to accelerate their EV programs. This could also discourage investments in charging infrastructure, an essential element for the widespread adoption of electric cars. Companies involved in building these networks, like ChargePoint and InCharge, may pivot their strategies toward maintaining existing stations rather than expanding to meet future demand. While federal policies may slow the EV transition in the US, global trends still favor electrification. Many countries are pressing forward with aggressive plans to phase out gasoline-powered vehicles and support EV adoption. For automakers with a global footprint, such as Ford and Volkswagen, these international mandates could drive continued investment in EV technology regardless of domestic policy changes. The new administration's stance could also affect competition with China, a dominant player in the EV market. Chinese companies like BYD and NIO have rapidly expanded their EV offerings, supported by strong government incentives and a booming domestic market. With the US potentially stepping back from policies that promote EVs, it risks falling behind in this critical sector, leaving room for China to strengthen its lead. Please don't forget to hit the subscribe button. Ultimately, Trump's policies are expected to introduce uncertainty for automakers and consumers alike. While EVs are unlikely to disappear, demand is growing, and many automakers remain committed to electrification, the pace of adoption may slow, altering the landscape of the US automotive industry. These changes highlight the critical role government policies play in shaping the future of transportation and the need for industries to adapt to shifting political priorities.